$82 billion for Warner Brothers from Netflix, and the street hates it. Why the street hates it, but why I love it and can't wait for the opportunity. Stick around, today should be a great video. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. I hope everybody's having a great Monday for you, Tuesday for me. What an incredible week last week. Today was a little bit rough with the indices ending up down, but I do want to talk about the purchase of Warner Brothers from Netflix, which I think is such an amazing deal for Netflix, despite the fact that the street hates it. And it actually, to me, creates an opportunity because I think that makes it a bargain as the stock price sells off. Now, why does the street hate it? Well, they think they've overpaid. And when they look at the debt that they're taking on, how much they're paying for Warner Brothers with the revenues that they bring in, they just see it as a net negative. But the thing is they're adding a lot of components to Netflix that Netflix really needs to round off their system, and it stops others from being quite as competitive as they might be had they taken on Warner Brothers. Now, the reality is, I don't think if somebody took on Warner Brothers, it would have had the value that it does for Netflix. I don't think it would have made them more competitive. I think it just would have given them a better library. But the fact is, Warner Brothers has been struggling to grow their business, while Netflix has a thriving business. The thing that people don't love about it is it seems like it takes away from their straight to digital and not having physical aspects. But that's kind of what I really love about it. It opens the door to a lot of things for them. And for those of you like me who are subscribers to Netflix, one of the complaints I have is, while they have good shows that they've started creating, their content is not the best. Well, this is a way to pick up a ton of content, a history of content that has decades of great movies. They have really incredible franchise movies that people just love. And I think it really adds to that what was needed by Netflix. And then you'd give them those studios to be able to produce their own content. And now it opens the door for them to actually do blockbusters in the theater if they want to. I know that the street is talking about how this is going to hurt Hollywood, but I think it starts changing how Hollywood is, because that was the direction it was going anyway, and this helps speed things along. So I love the fact that the geniuses and sharks and the guys who do the analytics are selling off Netflix, because to me that makes it less expensive if I want to pick up some of the shares, which I started to do. And I think I might have mentioned in another video that I also sold a put, and if it continues to fall, which it might have a ways to go to the downside, I will continue to sell puts slowly along the way. And if I end up having too small a position, oh well, I'm okay with that as well, because I just don't know how far they'll sell it off. I also do think it's a mistake. I don't think they see the long term. There are a lot of times that big companies that have the cash flow overpay for something in the beginning. But a lot of times they recognize the true value that that brings to their company. So I think this brings a ton of value to Netflix that isn't seen in the numbers. I do think it really rounds off that platform. And by adding all those studios to allow to produce their own content a little bit differently, I just think it's such a great fit for them. Now, please make in the comments, tell me what I'm wrong, what I'm missing. And if the only comment is they overpaid for it and the debt and everything else, well, go ahead and make it in the content. But I guess we just agree to disagree. I get that they overpaid, but from my standpoint, that is just fine. I mean, really, Netflix just picked up Harry Potter, Dune, DC, Batman franchise, amongst a bunch of others, all in one swoop to give them that decade history of type of content that they really need in order to propel further over the next few years. Well, not even few years, but over the next decades. It really gives them the clout that they were missing against companies like Disney. That's what I really love about it. And then here's the interesting thing too. So if it ends up being blocked by the government and they don't allow it to go through, Well, Netflix promised an additional 6 billion. Well, not additional, but they'll still have to pay $6 billion for the deal not going through. Now, I think it probably will go through for a few reasons. One, there really isn't a monopoly on streaming. It is open. You still have Amazon and you still have YouTube and you have some other distribution centers that compete with them. But it's not a monopoly in the same way. What the interesting thing to me about the billions of dollars that they're going to pay if it gets blocked is it still ties it up for the next few years and gives them an ability to grow some of their own content if it doesn't end up going through. Again, I still think it will. I see it as a weird thing that would end up getting blocked. There's no reason that companies shouldn't be able to compete in some form in terms of streaming. It is a different business. Now, in other news, after the bell today, Trump announced that NVIDIA could sell their H200, I think it's H200, forgive me if it's like N200 or something, chips to China, which is pretty cool because I think that really opens up the avenue for the entire market to go higher because I think that means that relations with China are probably going to get better. It did send NVIDIA, AMD, and Intel higher after the bell. But I think we'll see the rest of the markets go higher tomorrow when that news kind of spreads through. I do think tensions are shifting and things are getting better and the economy is doing okay. There's been a bit of a global recession. Their housing market was hurt pretty bad. But similar in the US and different in their ways, if you're in the good neighborhoods where people really desire to have houses, it's still a good market and the market hasn't collapsed. But they overbuilt in the outskirts, and those areas are struggling and have a lot of vacancies. I think the economy is kind of worldwide. I think allowing those chips to be sold in China really is the start of tensions easing and maybe tariffs even coming down, and just a good step forward for where we're going. So, other than the news events, from my vantage points, the markets look great. While we had a pullback today, overall it seems very healthy and that we seem to be in a trend upwards. I like what I'm seeing in terms of the individual names, and despite it being down today, I actually like how I feel about the market right now. I don't think any big major thing is going to come around to just cause it to collapse. I think as we get into the end of the year, we're likely going to see it go higher. Now, as always, nothing that I share in this video is financial advice. Please don't listen to me, and I don't think you should really be listening to anybody on YouTube when making your financial decisions. I am not a financial advisor. I suggest you reach out to a financial advisor as well as do your own research when it comes to your financial objectives. And I know I talk about this all the time because my goal in the channel, excuse me, is to get people to invest. It really doesn't matter to me what they invest for. I just think it's important to take a certain amount of money, put it on the side, and get it invested. And they're great avenues using ETFs of things that where somebody who doesn't necessarily want to learn a whole ton about individual companies and just wants to work their job and be able to put some money away. There are some great options for that. And it's created a whole way of being able to save the commissions you might pay to an advisor or somebody else. For example, and again, not financial advice, VOO is investing in the S&P 500. Now, you'll want to understand that it's highly weighted towards the Magnificent Seven because VOO is a weighted ETF, meaning a proper amount of money goes into each of the companies in the S&P 500 in terms of their market cap. There are ones, if you did a little bit of research, that aren't weighted like that. And you also have QQQ and QQQ. Boy, I'm getting a brain fart. But you have the QQQ, which is the NASDAQ 100 as well, which you can do, as well as some others like SCHD, and there are a lot of great ETFs out there. My advice, which you shouldn't take because I am not an advisor, is I would be really cautious of a lot of these really high yielding dividend stocks from the Yield Max funds or the others, as I think they take on a lot of risk that isn't really explained, and a lot of people who don't pay attention to this stuff and don't understand it and just assume that money managers know what they're doing. And if I'm getting an 80% return, wow, that's really incredible. That isn't necessarily really the case. So you need to do your due diligence and reach out to somebody who can explain it to you. I would be very cautious of those funds. It's interesting to me to see some of the videos coming out that there's one person in particular who's been touting these funds and he uses them and how great they are, that all of a sudden had somebody on the video who did a test case of it to show how badly the funds were doing for him. And he's been in there a while and he's lost something like, I think, don't quote me on it, please, about 50% of what he had invested. And it just goes to show that despite seeing that yield and being attracted to it, you have to pay attention to what the companies actually do and if there's more risk than you realize. Investing in a fund does not guarantee that they know better than you or that it'll perform really well. And past performance is not a prediction of future performance. Nobody, and I really mean nobody, knows the future. You can do your charting, you can do all your analysis, and you can think whatever you want, but it really doesn't necessarily mean that the stock price will go higher. The best thing to do is look at earnings, pay attention to revenue growth and things like that, and make the best educated guess you can as to whether a company is in good standing if they'll be able to grow going forward. That's kind of why I love Target. Just good opportunity to put that in there, just because I know how many people don't like Target, so it makes it funny to me. But my point is, if the fundamentals are good, at least to the best of the ability of the information that you can get, well, that gives a little bit of comfort that in time things will work things out. Like, it should be okay if the revenues are fine and they're making money. That doesn't mean that the stock may not go lower in the short term, but if you wait 5 years and a company continues to grow earnings, well, eventually it should catch up to itself and the stock price should correlate to that. It doesn't guarantee anything, and you never know what might be going on behind the scenes where the numbers might be bad, which is why it's very hard to rely on some of it. Now, I do trust that isn't going on. If you want to be invested, you kind of have to have some faith in the system, but there is a potential for all of it. I wouldn't put all my money into one basket, so to speak. Now, little asterisks, I wouldn't feel uncomfortable putting it into VOO or QQQM, mainly because they are a diversified portfolio. Now, I will recognize that I'm heavily weighted into Mag 7 and a few others, but I also understand that it gives me the entire S&P 500, even though it's just one ticker symbol. Anyway, that's kind of my rant on not to listen to me or anybody on YouTube. I might be the biggest moron out there, so really don't listen to me. But there are a lot of people with a lot of great content, but there are also a lot of people out there selling the signups for my courses and the make 100% in a year or 80%, or how I make $30,000 a month on selling options. Look, I love options trading, as some of you know. But I think people have to be realistic about the returns and the risks associated with things. So when you see these videos from people coming up about how to make all this money, it's pretty unrealistic. Getting a 4% return, which is what they've talked about forever, is something that one can probably rely on if they invest intelligently in terms of a dividend and allow your account to continue to grow. The S&P 500 or the stocks in general have averaged something like an 8% return. A lot of people say 10, but I'd have to take a look and do a Google search to see. I think that's a little bit on the high end. Well, if you're taking 4% of that and allowing some of it to continue to grow to keep up with inflation, so that as inflation continues, the amount that you're able to take from your portfolio should grow with the inflation, it's a rather safe amount to be able to take. Now, I know that's a small amount, and people look at the amount of money they have saved and think, but I can't live on that. Well, it's many, many, many years of putting away and putting away and putting away. I try to put away about $150 a week on average to an account for my son. When I do the math, that's $8,000 or $7,800 a year. it adds up over time. And he's young enough that you add that in and then you add compounding to it. It should give somebody a really big head start. If you're able to start young and just put away a small amount and continue to do that, it should be really beneficial as you get older. And I think your older self will thank you. Now, as always, if you could do me a favor, if you haven't already, hit that subscribe button, smash the like button, and by all means, make some comments in the comment section. That helps YouTube's algorithm. I won't be doing a live again tomorrow. I think the following week, or it could be 2 weeks out, I will start doing the lives again. I love the platform. It's just been really tough here in China. I haven't had a chance to do a lot of videos, which has been rather frustrating. In fact, I'm a little concerned I won't be able to get this posted, but I will do my best. It's just been a struggle with time. Anyway, again, hit that subscribe button, smash the like button, and have a great day and a great rest of your week.